The major markets closed the last full week of November mixed, with losses in the Dow Jones Industrial Average, as well as the MSCI World and Emerging Market Indices. The gains in the NASDAQ and the S&P 500 were largely the result of gains found within just a few underlying sectors. Consumer discretionary and information technology were the largest winners, which carried the technology-oriented NASDAQ. Utilities rounded out the positive performance last week, as losses were seen in the 8 other sectors. Energy experienced the largest pullback, as crude oil prices fell to a 6-week low. The nearly 5% decline in oil prices last week was attributed to a variety of factors, including a surprise in the estimated crude oil inventory, as well as reports that President Biden and Chinese leader Xi Jinping were both considering releasing some of their country's reserve inventories. Regardless of the direct cause, the oil market saw prices drop from the recent 3-year high seen in late October. In further political news, the president signed the $1.2 trillion infrastructure bill, and the House passed the $1.75 trillion Build Back Better Act. However, the Congressional Budget Office reported on Thursday that the Build Back Better Act would add an additional $160 billion to the budget deficit over the next 10 years, with a roughly $750 billion gap in the first 5 years. Meanwhile, in economic news, Wednesday's University of Michigan Consumer Sentiment Index made headlines as it reported the lowest reading in a decade, as the index fell to 66.8 for November.